Good morning, folks. This is Naeem Aslam live from London, and welcome to our channel on which we discuss several different opportunities on a daily basis. Now, bit of a housekeeping as always. Anything which will be discussed cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, in this particular section and on our YouTube channel, what we really do is we give you the fundamentals that are driving the markets, whether to the upside or to the downside, and then talk about the possible direction of the market trade as well, the which way that the market is really going to likely to trade from here onwards, and what are the upcoming trends as well, so that all of that really becomes a part of this conversation. And more importantly, I really break down the fundamentals to a level that can easily be digestible, and then it can make sense to everyone with respect to what exactly is going on. So in this particular session, what we're going to do really is we're going to discuss what happened throughout this week and where are those big opportunities really in the market. So that's what we'll be really doing it in our session. So what really happened? That's the question, right? So throughout this week, we've seen a lot of volatility because of two major events. What were the two major events? Number one, we had the Federal Reserve Committee coming up with its monetary policy decision, right? So on Wednesday, we had that big decision about monetary policy, and which was completely surprised the market. Why it surprised the market? Because market was expecting for the Fed to do something in relation to their Federal Reserve, in relation to their monetary policy. But guess what? The Federal Reserve actually didn't do anything. The Federal Reserve left everything unchanged with respect to its monetary policy. Of course, the forecast for the inflation and GDP, they changed. And of course, also we saw changes to the inflation as well, as I've mentioned earlier. But nothing was there in the policy which really kind of gave us an idea that yes, the Fed is concerned about the fundamentals that are driving the markets to the downside, and that is inflation and of course the soaring bond yields. So the question, very simple question, is why the markets are going down, why there is a disconnect between the Nasdaq and the Dow Jones and of course the S&P 500 index. Because remember, the Dow Jones stock index was one of the index which was the lagging index. It was the Nasdaq which was really shooting to the towards the moon. But now we are seeing a reversal of that trend. How so? We are seeing the Nasdaq moving to the downside. Now, if you remember yesterday, we talked about the Nasdaq pretty much forming the bottom. That's what we discussed. But unfortunately, that didn't really work out the way that we expected it. The reason that we said it was a bottom, because on the 100-day, on the daily time frame, the 100-day simple moving average was very much tested, and the message came out very, very clear, which was that now the market is going to move to the upside, and it tested the 50-day simple moving average on your daily time frame. But yesterday we saw the tech sell-off continuing because the bond yields were rising, because the Fed didn't really resolve the actual qualm or the concerns that the market was suffering from, or let's just say is still suffering from. So we saw a really, really big sell-off in the Nasdaq, and that pushed the prices below its 100-day simple moving average. Now the question which you may wanted to ask is where do we go from here? Okay, we've described what really happened. Where do we go from here? Well, the important thing is, can the price on the daily time frame for the Nasdaq can break above the 100, and number two, the 50-day simple moving average? Because if it cannot, then it is very clear that we are moving towards the 200-day simple moving average, which is likely to provide us the next area of support or the buy level in terms of Nasdaq. Now, as for the Dow Jones, it is all about vaccination story. It is all about this massive stimulus-based growth that we are seeing that is driving those industrial stocks to the upside, and likely it is likely that we will continue to see that. Overall, we are very positive. I mean, for the week, for the Dow Jones, and of course for the S&P 500 index. But something where we need quite a lot of optimism coming in is gold prices, because remember, gold prices saw that massive gain on Wednesday when the price broke to the upside, and that was primarily because dollar bets dollar index was moving to the downside. Few weeks back we saw dollar moving sharply to the downside, but now the dollar has reversed its direction and it is moving to the upside, and that is pushing gold prices lower. And at the same time, traders really do not see that typical risk of rally, because you look at the S&P, it is moving to the upside. You look at the Dow Jones, it is moving to the upside. But when you look at the Nasdaq, then you can say, okay, Naeem, that is certainly not moving to the upside, that's moving to the downside. But I think the general sentiment in the market is still risk on, and because of that, we are not seeing those hedge bets coming into gold prices. But I think when it comes to gold prices, traders have pretty much priced in to some extent, to some decent extent, if I will say, this particular factor that yes, we are likely to see the Fed responding to this rising inflation and soaring bond yields. So when the Fed will announce, whenever they will announce, we may not see the prices, for gold prices moving to massively to the downside, because dollar is already moving higher, because market firmly believes, if I say, that is really going to happen, and that's why we're seeing these trades really happening on both of these ends. Now let's shift the gear and move away from these asset classes and then go into Bitcoin and Ripple's XRP, and then see what exactly is going on with Ripple's XRP. You see that right now there is no doubt that Ripple's XRP could be massively oversold, but the only reason that you can think that it is massively oversold is if it can win the case against the SEC. Because if that takes place, then there is no doubt we're going to see massive moves to the upside. Sterling will really go high quite a lot. But, XRP will go up quite a lot. But if it loses the case, then it's the only way is to the downside really for XRP, and then we can see massive sell-off in terms of that currency. Now when it comes to Bitcoin prices, I'm still seeing that momentum. I'm still seeing the bulls coming back into the market. The 4-hour time frame is where you gotta keep an eye on, and there are two things that we've got to focus. Number one is your 50-day simple moving average. Number two is your 60,000 price level. If price can stay above the 50-day simple moving average, that means it can break above the 60,000 price level. If it can break above the 60,000 price level, that means it can go all the way to 70,000. So this is what the ready play is. Just to finish off, oil prices, crude oil and Brent, they have been trading to the downside massively. Yesterday we saw a big sell-off. So Brent could find a support near $60, I would say so, because over the last 5 days we have seen really big sell-off. On the week we are down by 8%, but this particular sell-off, $60, is still not that much of a really good support. We can actually see the move going all the way to 55. Why the prices are moving down? Because of this new wave of coronavirus emerging, where certain countries have put back those restrictions, and the concern is that supply and demand equation can really get out of whack. So that is the concern among investors and traders. Now this is where we say goodbye for this particular week. If you like the content, please smash that like button and hit that bell icon as well, because that'll give you an opportunity to get all the notifications the moment that we go live. And if you have any questions in relation to this, feel free to comment over here, and I'll come back to you in relation to them. That's all for now, folks, and enjoy your weekend. Stay safe, and I'll see you guys next week. Same place, same time. Thank you.